Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets of the stock market. You won't believe what Akero Therapeutics has just done to its massive debt situation. It is a bold move that could change everything. Before we dive in, if you're all about getting clear, understandable insights from those complex corporate filings, make sure you hit that subscribe button and ring the bell. Also, we have a fantastic community over on Discord. If you want to chat directly about these kinds of moves, all the details are in the description. So Akero Therapeutics has just filed this Form 8K, which among other things tells us about some big financial news. It's not a quarterly report with a ton of detail, but it announces something pretty significant. On the 23rd of September of 2025, Akero Therapeutics made a big payment. They essentially paid off all the money they owed and related costs under a specific loan. Think of it like clearing a huge credit card bill entirely, and they paid a total of $37.6 million to do it. This debt was from a loan and security agreement they had with a company called Hercules Capital Incorporated. This agreement was originally signed back in June 2022 and had been changed a couple of times. Scroll the term loan scroll. This loan was actually set up so they could borrow up to $150 million in total. Scroll the company borrowed $35 million Scroll, but Akero had only borrowed $35 million under this agreement. It's interesting they had access to much more but only used a fraction of it. The interest rate on this loan was also pretty high. It was either 7.65% or the prime rate plus 3.65%, whichever was greater. Imagine that potentially above 10%. Scroll interest only payments on the borrowings Scroll. Normally this loan agreement had a period where they only had to pay interest and didn't have to pay back the main amount borrowed until January 1st, 2026. After that period, the payments would have gone up to include both interest and the principal payment until the loan was fully due back in March 2027. Scroller obligations, covenants, debts, and liabilities of the company under the loan agreement were satisfied and discharged in full Scroll. But now, by paying off that $37.6 million, all of Akero's responsibilities and debts under this specific loan agreement are completely gone. Everything except for some warrants, which are a way for Hercules to potentially buy Akero stock in the future, have been terminated. Scroll common stock par value $0.0001 per S-hair Scroll. And speaking of Akero Therapeutics Incorporated, their stock is traded on the Nasdaq Global Select Market under the ticker symbol Akero. Now what does this all mean? Why would a company take on a significant amount of debt like this and then pay it off so quickly? Well, in the world of biotech and early stage companies like Akero Therapeutics, debt financing is a common way to get the cash needed to fund research development and clinical trials. These things are incredibly expensive and can take years without any guarantee of success. Hercules Capital Incorporated is well known for providing venture debt to these kinds of companies. So Akero borrowed money to keep their operations going and to push their promising drug candidates forward. The fact that they had the cash to pay off over $37 million suggests they either raised a substantial amount of new money recently, or they've been generating cash from other sources. This is a really good sign for their financial health. It removes a significant financial burden, no more interest payments, no more principal repayments looming. This move can free up their cash flow, allowing them to invest more heavily in their pipeline, or perhaps pursue new opportunities without the pressure of servicing this particular debt. It also sends a strong signal to investors that management is confident in the company's future prospects and its ability to fund itself. It can make the company more attractive to other investors and partners because its balance sheet is cleaner. We need to remember that this loan was structured with interest, only payments for a while, and then principal payments would start. Paying it off now, before those bigger payments kick in, is likely a strategic decision. It's possible they secured more favorable financing elsewhere, or decided that using their existing cash reserves was the best way to eliminate this obligation. On the flip side, paying off such a large sum could mean they used up a significant chunk of their cash reserves. We'll need to see their upcoming financial reports to understand exactly where this money came from. Was it a successful equity raise, or were there other factors? Overall, Akero Therapeutics Incorporated making this significant debt repayment is a very positive development. It shows strong financial management and a strategic approach to managing the company's obligations. It removes a potential risk factor and strengthens their financial flexibility. This is the kind of proactive move that can really position a company for future growth, especially in the competitive biotech landscape. Alright, so that's our look at Akero Therapeutics Incorporated's recent financial maneuver. What's your take on this debt payoff? Does it signal strength or something else? Let me know your thoughts in the comments below. If you found this decoding session helpful, make sure to smash that like button. That really helps us out, and subscribe so you don't miss our next deep dive. And don't forget to join our Discord community for more discussions. Thanks for watching Corporate Decoder. See you next time.